Good morning, traders. This is Michael coming to you from GammaEdge on Tuesday, May 13th with our pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. Currently looking at our market trend model that's based on the tick index. You can research that at your favorite investing website. But the quick takeaway of the tick index is buying versus selling of market participants. If there's more buying versus selling, the overall market trend model will be to the upside as well as the tick index, and conversely to the downside if there is more selling. The key component that we watch intraday is this bolded white CT here. This is our cumulative tick. It's aggregated, obviously, of buyers versus sellers. You want to see the bolded CT be from lower left to upper right if there's more buyers versus selling. As we've seen for the past few days to almost a week, the bolded CT as well as our moving averages that give us an overall indication of trend and momentum have been sideways. We did see the bolded CT peak out above those moving averages yesterday into the close. So again, there were more buyers versus sellers. We would like to see the CT or the cumulative tick take out these previous highs, as well as the high of the day, indicating that obviously buyers are maintaining overall control in the short term. Our colored ribbon, which is our longer term positioning model, looking back a significant number of days, continues to the upside. If the red moving average is above the cyan, then the buyers are in control of the longer term uptrend, which we continue to see, and we continue to advocate progressive exposure via your favorite trading plan in the overall market, and also getting involved in the market on any pullbacks, as we still have bullish sentiment, structure, and trend is our main theme for the overall market. The breadth indicator, new highs versus new lows. Obviously, you want the green above the red, indicating that more stocks are being bought than sold, and that's continued yesterday, as well as numerous days continuing the past week or a couple weeks. And then our filtered cumulative tick, this is a plus 1,000, minus 1,000 block orders filtered out. Obviously larger institutional orders or larger market participants, players in the overall market, and you want to see this maintain obviously above zero or have some significant move to the upside if buyers are stepping in with urgency and buying the market to the upside very rapidly. Yesterday just saw it hanging above zero, and really the past week, as we've seen the consolidation really matches the filtered cumulative tick, as it's just kind of oscillating above and below zero. So we'll see how this plays out today. Obviously, if there is significant move to the upside on the filtered cumulative tick, then institutions are getting involved and placing more risk in the overall market and to the upside. Moving on to the SPXA. This is our cruise ship. These are longer term positioning of the SPX options complex, as you noted here. 5/16, we have OPEX expiry this week. And then we have all expiries turned on as via the tiles, the purple tiles. The SPXA is, as I said, longer term positioning. The contracts do not turn over as much. So this really doesn't have a huge effect on the short term as 0DT or the weekly, but we like to look at this to see where overall market participants are positioning, again, for longer term money and risk in the overall market. We are call dominated, so indicating the institutions are putting are out of the money call speculation and putting money to risk in the market. To the upside, we see 5,900 is a key important level. If we traverse up to that level, obviously we still maintain that we're bullish as long as we have these in the money calls below us via the green net delta. And then obviously we have transition area here on the SPXA. As I said, I want to state that this does not control the intraday overall price action and structure, but we like to look at this to have a 40,000 foot view of how longer term and larger market participants are positioning. So 5,800 to the downside, that's a key level to stay above. If you're bullish, even if we get below that, we still have a significant amount of in the money calls, so this would be supportive all the way down towards that 5,700 level. Below 5,700, we'd obviously be a little bit more cautious and risk off via the longer term market participants, the SPXA. Also remember, we do have OPEX, as I already stated, for the week. Coming into the SPXP, this is our smaller, quicker speedboat. Obviously, these contracts turn over much more quickly via 0DTE, as well as weekly expiry. We are call dominated here. Net Gex is in the positive area, positive stance. So again, in the money calls are dominating above and below spot price, as you can denote by the green net delta here, as well as the net OI, significant strong in the money support below spot price at the moment. I've already denoted the 5,800 to the downside. Obviously, that's an important PGEX level, as well as we've shaded this, noting a strong support type look from the call OI, as well as the total OI, and these in-the-money calls below will continue to be charm flow supportive. To the upside, again, we've noted that the green net delta continues to come into the overall market. So out of the money call speculation continues to the upside. We see the JPM short strike here with the hedge at the 5,900 level, 5,905 level. So that's giving us these red negative net deltas here. Obviously, that 5,900 is a confluence of levels on the SPXA as well as the SPXP. So if we traverse up to there, we could anticipate some sort of stalling around that area. If we do get above 5,900, then 5,950 and 6,000 would be most likely the targets to the upside. And as long as we see out of the money call speculation and the MTM market model continue to maintain the overall structure and sentiment. Moving on to the 0 DTE of the speedboat, which is the SPXP, call dominated above and below spot price. Green net delta just dominating the overall structure, as we've noted. So any pullback will be supportive unless we get significantly below a key area, which for us would be the 5,750 level. That's the bottom of the drunken sailor range. So make sure you denote if you're inside the drunken sailor range, it can be choppy and a little bit volatile. You'll know very low exposure areas. We have some areas with 0 net OI, as well as very low into the hundreds. So again, if you're down below the transition level of 57.90, 57.95, this can be very choppy and price can move pretty rapidly, at least towards the bottom of DS, where we'd anticipate this to be supportive via the in-the-money calls below us and the overall charm flows for the day. So we'll continue to watch that. Below 57.50, we'd most likely be a little bit more risk off and cautious. We'd watch for a retest and rejection of 57.50, or just within the overall transition or drunken sailor range to have extreme choppiness. A pullback towards the top of transition within that side, the drunken sailor range is still bullish, and this would be an opportunity to get involved for the upside. And then above 58.50, we'd be targeting 58.75 and 5900. We most likely see those fairly rapidly, as long as the volume command, which is our intraday command, that gives us an idea of where market participants are positioning the mass of the overall volume of the options contracts. And as long as that is in a bullish look, which positive slopes to the upside, then that means out of the money call speculation continues, and we most likely see some sort of price appreciation. Moving on to the SPX delta balance charts, again, maintaining above the 0 line, which is your key area to maintain call domination. Obviously, we've split these in the right and left-hand plane. Via the green is the right-hand plane, the red is the left-hand plane. Right-hand plane is above spot price, red is below spot price. And then we have the aggregate delta balance here. This is just basically saying that call speculators are in control of the overall market as long as we stay above 0. And then we like to see positive slopes to the upside for both of these, indicating that in the money calls or out of the money call speculations coming in via the right-hand plane, and out of the money or in the money call speculation below spot prices being maintained, which we currently have those. We do see a slight drop in the out of the money call speculation, but really nothing to worry about as long as we maintain above the 0 line. So everything looks bullish there for any pullback, as well as the overall market structure and sentiment. Qs maintaining above 0, that key important area for call speculators to maintain control. Delta balance pegged at 1, so nothing really to say there. Everything looks bullish on the Qs. SPXP, delta balance, again, maintaining above 0. You'll also denote the positive slope in the right-hand plane. This is out of the money call speculation, projected on out in time, continues to move back to the upside. And then delta balance pegged at 1. Short term, we did see that quick or short out of the money call speculation drop. So we might see some consolidation or pullback within the overall structure. Again, to transition or those key gamma delta levels is within normal specs or normal requirements of the overall market to maintain a significant trend to the upside. Net stat command for the SPXP, these are our highest sensitivity strikes for the day. Obviously, we've discussed 5,800. A pullback to there would be a nice area for an entry to get involved in the market if you're not, or if you're looking to trade 0 DTE, that would be a key area, obviously, to be maintained. And then to the upside, 5850, we've discussed that. Need to get above 5850 to target 5875 and 5900. Again, we are call dominated via the left-hand plane and right-hand plane, so this is nothing but other than bullish unless we start losing significant levels below us. So again, in the money, any pullback towards these in the money call levels or other key gamma delta levels will be supportive and an opportunity to get involved in the overall market. All right, moving on to our game plan for today. Obviously, let me check what the pre-market open looks like. So pullback, we ran up towards 58.60, this 58.50 level we were talking about, and now we're pulling back a little bit to 58.45. So moving on to our game plan, staying above 5,800, that key level we've already discussed, the confluence is going to be the utmost importance. So I would not be out of the realm of possibilities to see some sort of profit taking this morning, pull back towards 5,800. Consolidate around that area. Supportive flows come in, and we move back to the upside. Obviously, we're within the overall drunken sailor range to start the day, and if we're in this range, it could be some choppy, volatile type action. So those would be very short-term trades, scalp type trades. If we get above 58.50, we'd be long to the upside, looking for 58.90 and 5900. If we're below the 57.50 level, we'd watch for some sort of rejection to get short, and then a move down towards the zero gex level on the all expiries, or sorry, the all expiry full complex, which would be around 5,700. If we maintain above 57.50 on the downside for the drunken sailor range and see some sort of bounce, we'd be long for a move back up towards 5,800 and then through 5,800 towards the top of the drunken sailor range, 58.50. So that would be our key levels and our trading plan for the day. So with that, hope everybody had a great day. We'll check in with the Discord pre-market. If you have any questions, let us know, and we'll see you in a bit. Thanks.